We're joined by Phillip Streible, Chief Market Strategist at Blue Line Futures. Phillip, thanks for giving us the time. A horrible situation in Ukraine, the death, the destruction, commodity markets gyrating. What about oil? Are you putting on any trades in oil this week?
It did close out the gap. So there were some people that came in and were purchasing oil on that little pullback. You definitely don't want to chase any of these markets right now. Volatility is just so high. I mean, it's the highest volatility we've seen since when COVID first hit across all asset classes. So it really, if you start trying to work off of emotions, remember you got to check those at the door. You start trading off of that, you're going to end up buying the top on one of these markets. And, you don't want to get involved with the market after the move's already happened. So also headlines, they're really driving that market. I mean, 1 minute Germany's back buying, oil and gas. Next minute, Secretary of State is arguing with Iran that you can't have nuclear weapons, so a deal might not be on the table with them. So huge gyrations.
And there's a real risk, you think, that you find yourself buying in at a temporary top anyway.
Yeah, I think you got to go half the position that, even with the highly volatile market, you might go a quarter of the position you have. So traders out there that were trading the 1,000-barrel contract might be only doing, the 100 or a couple of them, kind of layering in, layering out. I think that's the only way to really play it, or look at other markets that are not quite as volatile, but those are hard to find.
Yeah, how are you playing the metals? Copper abruptly dropping today. Did you see a particular reason why copper would have come down so sharply?
Yeah, that was kind of aggressive on that move. I mean, if you get to see a slowdown in global growth, which we are completely anticipating, often copper is that bellwether. Dr. Copper is going to tell you how the global economy is. And, I think the global economy, we're really setting ourselves up for, a rapidly deteriorating, economic situation. So all the base effects, they're going to continue to come down on a number of different headlines. We've got a couple of headlines coming out this week in the U.S. Business confidence, consumer confidence, those are all going to come down as well. Inflation's going to remain sticky. So I think that selling equities on any kind of big bounce here until we get closer past the second quarter, I think is appropriate.
What about wheat? Would you pile into wheat right now?
I can tell you. So the story with wheat right now is that when this morning I was, we came into last night, turn on the computer, pull up the Dom Trader, it tells you how many people are trying to buy wheat. It was at 200,000. At one point, it came down. It got close to about 2,500 contracts and people trying to buy it, limit up. Now it's accelerating higher. I mean, it was just 30,000 a second ago, all trying to buy it up there. So, you got a lot of people that are trapped on the short side. A lot of people, end users, still trying to cover. A lot of the funds coming in and speculating on it. You got one of the largest agricultural cumulative holdings by funds that we've seen in quite a long time.